Alright guys, welcome back in today's new video on this channel. My name is Luke, head of trading from Learner Trading Academy, and in today's video I would like to again show you example of absorption. It seems like you like my videos about absorption, and it's also main setup which we trade in our Hero Academy, where by the way are already 11 students who highly praise our program. So thank you so much for your trust. Alright, so in short, what is absorption and how you can profit by trading this type of setup? Absorption indicates market reversal and trend change. So if you see for example downtrend on BTC for example, and then you spot absorption, it can be one of the signs of trend change and trend reversal. So you can open long position and capitalize on this specific move. The reason why I like to trade absorption is that this type of setup is really precise and accurate. And if you know how to trade absorption correctly, you can make really decent amount of money. Before we get into the absorption, you need to know the basics of market. So market is place where supply and demand. And there are two main groups, sellers and buyers, which they are then divided to subgroups, passive and aggressive. Aggressive sellers and aggressive buyers buy or sell for market price. They sell or buy immediately for current market price. And then we have another subgroup, which are passive participants, passive sellers and passive buyers. Passive, and from word passive, there are passive participants. They are placing their orders to order book at specific price levels. So they don't buy immediately or sell immediately. They wait until price reach some specific level they want to sell or buy on. Next really important thing, which is highly connected with absorption and that you need to understand, is that for every buyer there need to be seller, and for every seller there need to be buyer. So if you want to sell a huge amount of contracts, let's say you will sell 3000 contracts on the price level of, for example, 95,000. At this price level, there need to be someone who is willing to buy all of those contracts. So there need to be what's called liquidity. Because if there is no liquidity or low liquidity for this specific order of 3000 contracts, some of those contracts will be sold at this level 95,000 and the rest of it will be sold at lower levels. And this wouldn't be very advantageous for institutions that are selling these contracts, because logically their profit will be smaller. Therefore, they are searching for high liquid levels, where is a lot of stop losses, a lot of breakout traders, which fills day orders. And that's what's called absorption. Now you know the basics, and let's look how absorption works and how you can trade it. During absorption, aggressive participants try to push price up or down, but passive participants absorb all this aggressive force. Eventually, the aggressive participants give up and the price reverses against them. This is basic explanation of term absorption. Imagine it like an arrow hitting a thick barrier. The arrow, aggressive participants, tries to break through, but the barrier, passive participants, absorb all of its force. Eventually, the arrow loses momentum and bounce back, just like the price reverse in the market. And what is actually happening? In the real markets, it means fill of big position. A huge institution has big, chunky limit order at specific price levels. This is the limit order, passive participant, because this order is too large for classic market execution. So they need to split these orders to smaller parts and enter as a passive participant. Then we have aggressive participant. Aggressive participants moves the market because they entering for market price. So they are buying immediately. They don't waiting, they don't actually mind what's the actual price. They just want to buy or sell at specific moment. That's why they are called aggressive. And after they reach the same level, where is the huge passive limit order of the big institution, they basically fill this order. An important thing to understand is that if you have limit order waiting at specific price levels and the price reach and fill it, you instantly become aggressive participant. So for example, if you place limit sell order, you are passive seller. But once the price hits your level and your order gets filled, you turn into aggressive seller. Because you are no longer passive participant, you are active, you are aggressive, you have opened short position in that specific time. So if large limit sell order gets filled, you will see it on the chart as a spike in volume showing strong buying interest. However, the price won't be able to move higher because all of the buying pressure is being absorbed by passive sellers. I'll show you in a minute how it looks like and what patterns should you look for. So we can see uptrend, and here we can see some resistance level, swing high, swing low. By this move you can see that there are more aggressive buyers who are willing to push price higher. However, when we reach this swing high, or more specifically area above the swing high, we can see something strange. Because look at the volume, look on the delta in this candle, where is high volume, and look at the momentum. Look at the close of next candles. In short, we can see a lot of positive delta, which indicates a lot of buying pressure, a lot of buying interest, but in the same time we can see weakness in the price. All of this bearish close and all of these volume areas, which are created in the upper wick of these candles, indicates weakness, even though we have strong buying pressure right here, in form of a huge volume and a huge delta, huge positive delta. This idea is also confirmed by imbalances, because as you can see, all of those green numbers indicate imbalances, which also means intention, buying intention. However, price is not able to move higher and break these levels. Why? Because there is huge limit sell order. Someone big is trying to enter the market and build short position without immediately moving the price. And after he gets filled, he will simply dump the market, and this move will be the move where he capitalizes on, because he is full size in from these levels, because all of these aggressive buyers filled his position, so he has good entry price, and now he can dump, he can capitalize on a short move. And here is perfect example of long position. As you can see, I've marked this range high and this range low. At the bottom of this range, at this green box, which indicates range low, you can see this volume spike, which indicates higher activity. So let's look what is happening at this area from footprint chart perspective, which is, by the way, this window on the right side. First, look at the delta and volume. The volume is this white box right here, and delta is this red bar. You can see a lot of negative delta supported by a huge amount of volume, which means high interest in selling. You can see a lot of negative delta and a lot of volume. Delta stands for total amount of contracts being traded on the bid side. Next, look at the imbalances. You can see a lot of selling imbalances in the form of these red numbers. These imbalances are created in the lower wick of this candle, which means a lot of intention at this specific part of this candle. But look, where's the close? You can see clear rejection from these levels. What is even more interesting is this candle right here and this candle right here. Things what we can see is negative delta shifting to positive delta, and both candles closed as a bullish candles. So my entry would be somewhere around this area, or I could have waited for this pullback, which confirms the participation of buyers. How I know that? Look at the volume of this pullback candle. A lot of volume, a lot of imbalances, selling imbalances, which basically creates another absorption. So this is clear long signal. I explain it in a very simple way. In the course we have entire module and lesson for this. This is just to give you a basic understanding of how you can spot the big players in the market and capitalize on the same move as they do. You can see absorption on every single time frame, 4 hour, daily, weekly, or even 1 minute time frame. You can trade absorption with Bitcoin, with forex, with indices, stocks, or commodities. We in Learn Trading trade absorption with Bitcoin. So as a result, you can use absorption for day trading or as a sign for long-term investing. It will then depend which time frame will you use. Alright, and this is absorption. This is how we trade absorption, how we spot absorption, and how we use this type of setup. If you found some value in today's video, please consider subscribing this channel or liking this video, because these two things helps this channel a ton. And if you are more serious about trading and you want to learn full A to Z strategy which we use in Learn Trading, be sure to visit our Hero. I'll leave you a link in the description of this video. Also, if you have any following question about this video or about this topic, be sure to ask in the comment section down below. I will be happy to answer you. Thank you so much for your time, thank you so much for watching, and I'll catch you in the next video.